What about the others? Okay. All right, so we're live. Hi, everybody. Welcome to the session on new age opportunities in the area of banking and finance laws. I want to welcome you all here. This is Abhyuday Agarwal. I'm a CEO and co-founder at LawSikho, and we have been working and researching on an exciting range of new opportunities that the area of banking and finance laws throws up. So I'm asking all of you to quickly, as you join in, shoot me a message and say what you're doing currently. And the target audience that I am going to be catering to today is going to be small law firm owners, independent practitioners, and people working in, let's say, a bank who are looking at other opportunities in the banking and financial sector. Okay, they may find this beneficial too. Okay, and if you're a lawyer, if you're a law student who wants to work in an NBFC or a bank, you want to work in the banking sector, this is going to be useful. Okay, and if you're a small law firm owner, independent practitioner, whether a CA, CS with qualification in law, and you want to work for these clients, okay, which are banks, NBFCs, or fintech companies, then this session is for you as well. Okay. Great. So there are a lot of law students. There are practicing lawyers, lawyers working in banking and finance, lawyers working in disputes team. Okay, great. So welcome to the session. Now, today, let us look at what are the new age opportunities and why are we calling this new age? Okay. What are the kinds of opportunities that we are going to have in the banking and finance sector? So those of you who are working in banks, you've worked on a lot of banking deals, but I'm going to sort of give an overview of the model, how banks are working, what is the opportunity here. So in the banking and finance sector, there has been conventional banking and finance work, which is very important. I'll jump to that in a moment. What is the banking and finance work which is conventional? Like the loan agreements, security documents, that's the contracts side of the work. Okay, loan agreements, security documents. If the bank is providing project finance and project related documents, if there is litigation happening, disputes and recovery related work is important for banks. So that means work at an RDBA, Debt Recovery Tribunal, under the RDBA Act or under the Sarfazi Act. Okay, now this could be for, you could do this work for banks, or you could do this work for the borrowers, defending them against enforcement. There could be IBC related matters where you would initiate IBC action representing a bank as a financial creditor. Okay, or you could be representing the RP. Okay, when, or the borrower initially, you could be representing the borrower or the RP in when IBC proceedings are initiated. You could be representing members of the committee of creditors in our IBC proceedings. So broadly, this was the conventional work. Okay, and now what's going to happen to the conventional work because of COVID? Uh, I'm going to ask you all questions, and I'm also going to have a conversation on it. The conventional work is going to remain. Right now, you may have seen that there are going to be an acceleration in the volume of defaults. There will be issues around the moratorium. Various borrowers will be asking for a moratorium on specific interest payments. There can be an increase in defaults. There may be recovery proceedings initiated after lockdown ceases. Okay, and obviously, based on whatever the economic impact is, the sector may face some difficulties. But does that mean that regular banking and finance work will reduce? Not at all, because banking sector is the lifeline of the economy, and right now there's going to be a focus on a lot of recovery related planning, restructuring work, all of that. Okay, and those of you who are working at banks would have seen, I don't think that work for you would have reduced. You might, even if you think that the number of new loans may have reduced, but the work may not have reduced for you as lawyers. Okay, so that's one side of the business to keep in mind. But what are the new age opportunities that are going to come up? The new age opportunities, now, as you've seen, there are technology related businesses which are doing well, and a lot of the banking and finance work may be done by a lot of new opportunities will arise in technology related finance companies. Okay, these, what, how are these structured? These are basically NBFCs, non-banking finance companies, okay, which are created with a specific purpose, and they would give loans, and they can decide to give loans of specific sizes for specific purposes. Okay, and what but they will be tech enabled. Now how does this work? So for those of you who have a sense, basically the structure of RBI has been giving out banking licenses. The last major set of banking licenses was given out in 2013. Okay, so now if somebody wants to start off in the financial space, what people do is they will want to get into not as a major bank, because it is very, very difficult to start. Is my voice low still? Kunal, are the others finding my voice to be low? Okay, let me know, okay, if my volume is low. So if you want to start get into the financial services space, I'm going to speak from there. Okay, new age career opportunities start from the question that how does a businessman get into the financial services space? You could start a bank, but starting a bank is very hard. After 2013, you had only 2013 was the last time when banking licenses were issued by RBI, and it also is difficult to get that license. You need a lot of capital. In 2016, there were a few small finance banks and payments bank licenses which were given. Okay, but that's not the full space of banking business. The full space of banking business is around today of banking and finance sector is around starting NBFCs or what is called an alternate investment fund. I'll get into it in a short while. What it means is basically you get an RBI, a non-banking finance company is into specific kinds of lending related business. There are many categories that RBI categorizes NBFCs into. There could be a deposit taking NBFC, there could be a non-deposit taking NBFC. You don't have to get into the categories, but the important part to think of is this, that with a capital of as low as 2 crores, okay, as low capital as 2 crores, you can get an NBFC license from RBI, which means that now if you are a tech enabled NBFC, you can start out various different kinds of businesses. And 2 crores is not much money, right? You can raise venture capital very easily to create a NBFC in the financial services space. So this is where all the opportunities are arising. Okay, now what are the different kinds of business models that these NBFCs have? Why am I taking you here? I'm taking you here because we are seeing a huge increase in the opportunities that these working in these NBFCs is going to throw up. And what kind of opportunities will be there? You could be working with these NBFCs as in-house counsels. You could have retainers with these NBFCs as independent litigators. Okay, and that is where the opportunity lies because of the vast variety of work. And one thing to keep in mind is that these these businesses will have very, very complex work to do. I'll give you some examples about how this happens. Okay, what is the kinds of complex work? But let me just get to the models that are being followed by these NBFCs. And in case you all are not able to follow anything that I'm saying, feel free to ask questions. Okay, so let's look at this. How does a finance company earn money? Okay, one is you could earn money by lending, right? You can earn, that's called a fund-based business, where your income is based on the lending. Because you've lent capital, you earn an interest on it. Or the second could be a fee-based income. Fee-based income means because of specific consultancy or advisory or skill-based services you're providing, you are earning money. So these companies have a mix of fee-based and fund-based income. Fund-based income usually overrides the fee-based income by a huge margin. So 10-20% could be fee-based income, or 5% could be fee-based income, but the remaining would be fund-based income, meaning they have lent that money to borrowers. Okay. Now, what are the different kinds of business models that these companies will follow. Okay, so I'm going to take you through some of these business models. You've had P2P lending, which hasn't so far been very successful, but you never know when an innovation makes a model be successful. What is P2P lending? P2P lending business is involves a platform where one NBFC facilitates lending from one entity to another. One tech platform is facilitating lending from one individual to another who needs that money. P2P lending work has not kicked off very well in India so far because the lender is not able to effectively trust the person with the borrowing requirement. Okay, now this is a business issue, it's not a regulatory landscape issue. If somebody comes up with a better platform which enables a better kind of trust to happen, a better kind of trust for a lender towards a credit seeker, then that model can kick off. But P2P lending is a dedicated set where RBI has specific regulations in force. There you will need to make this work. Now imagine that if you are actually working for such a provider, people think that I will access the RBI regulations on P2P lending and I'll be good. Okay, but it doesn't work like this. I'll tell you why. Because when you create a P2P lending platform, apart from the fact that you need to see the RBI's regulations, you also need to see a lot more things. What is the standard? For example, what is the documentation you will enter into with the person who's going to lend the funds? What is the documentation with the borrower? Will this be a tripartite agreement, or will the platform simply match the two? What is the liability that the platform will assume? Which liability will it not assume? Will the platform perform any checks to ensure that the lender or the borrower who have requested a loan on the P2P platform, that these are not fraudulent? None of that the details provided by these parties are genuine. So these kind of issues come up. So you have to create those documents. You have to identify beforehand at the structuring phase of the product that what is going to be the liability of which party, how is the verification process going to work. Okay, so there's going to be legal structuring work, there's going to be advisory work on the nature of the product being offered, there's going to be contract related work between, so you will create those standard form contracts. Okay, then at the end of it, then there will be, once the business is commenced, what happens? Once the business is commenced, there are going to be tweaks to the business model from time to time. So you will keep modifying and improving the business model. There may be new variations of the products that will be introduced. So any banking and finance business, any NBFC in this space is going to keep on innovating to grow. So you will have to work on that. The other thing that can happen is, so there will be periodic compliance as per RBI's regulations, because there are very, very specific things that you have to comply with, and every category of business has it separately laid out for them. Banks have it separately, NBFCs have it separately, P2P lending platforms have it separately. Okay, so that specific compliance will be there. In case the business is scaling up, okay, so you might raise venture capital investment from Indian or foreign investors, then you will have more work to do on helping the business raise investment. Okay, and if there is a dispute and the lending platform is sued, you may have to take up a role there. Okay, so at the initial stage, when these platforms are of a smaller size, they're just kicking off, that's when they're going to approach independent practitioners, small law firm owners to take up this work, and you may get a request to draft a simple contract. Okay, and it looks like a simple contract request, but when you actually get into it, you will realize that there is a complexity involved. You've got to look at RBI's provisions and all of that, and then you realize that, oh, okay, these are the things I need to look at. Okay, but when you do the first job properly, what happens is they start giving you more and more work because they are able to rely on you. So just keep that thing in mind. Okay, this is one example of a model which is P2P lending. Payments banks I explained very briefly. Payments banks I didn't explain. I'll get to that later. Now, app-based models are very popular in the FinTech space. Okay, so imagine there are examples which I had shared in another session. So imagine creating an app for providing loans for education, for example. Or let's say Amazon ties up with a FinTech, with a finance provider to say, right now Amazon is directly giving you EMI options, okay, and it may have a parallel agreement with the banks, because if you have a credit card from five or six banks, then you can get your payment made in EMIs. But imagine that there is a separate financing company which ties up with Amazon, and it says that any product that the customer buys, you want to buy, let's say, a top latest MacBook Pro, you will get it at 10,000 rupees per month. Okay. Now, in a lot of industries, this is happening. Now, here what happens is there's an e-commerce provider which is selling you the products. There's the customer buying it. Okay. And there is a financier who is financing the products. So now imagine the number of parties in this. There is a platform, the technology platform selling the product. It may have a backend vendor. Okay. A backend vendor who is basically listed the product and selling the product. The backend vendor may have the supplier, logistics supplier, who will deliver this product. Okay. And if you are advising the finance team, you may not get involved in this at the moment. Okay. So the product is sold to the customer, but the product is financed by this lender. So you will have to have a contract from the lender with the customer saying that this is the product you're purchasing and these are the loan terms. In case you default, then this is the action that will be taken. Okay. You will have to understand how data about the purchase flows, one to the e-commerce guy, and second to the lender. Okay. And you will have to take appropriate customer consents that way. In case of default, you will have to inform the customer of the action. Okay. So this is an e-commerce related model. These models are becoming popular. Okay. I can look in a while. If you all want, I can look at examples and give you. But if you just search for FinTech companies in India, you will get a post from Inc. 42, where there are about 10 of such companies listed. Okay, and I'll take you through that. Actually, you'll be able to identify which are the top FinTech companies, but there are many more which are coming. And like Sachin Bansal has invested about 250 million in Navi Technologies, which is exclusively working on the FinTech space and investing into ventures in that space. So there's a lot of innovation happening here. So e-commerce sector has another aspect of it, that any e-commerce player usually has a wallet that is in place. A wallet is usually, these are semi-closed wallets. You can basically you can store some money, you can put your currency in the wallet from your credit card, you can pay into the wallet and purchase something, or if a refund is given to you, then instead of crediting the money to your bank account or credit card directly, they will give it into your wallet. So wallets is another part of any e-commerce business that is now existing. This helps an e-commerce business because they're saying that, since your money is in the platform, the customer is likely to use that money and there's no outgo of cash from their side. Okay, so if they refund it to you, for example, you purchase something for 50,000, you got a refund and it's not on the platform, then basically you can take the money out and spend elsewhere. But if they credit it into your wallet, then you are likely to spend the money on another product in that system only. So it's beneficial for the platform. So most e-commerce platforms want to have a semi-closed wallet. That has to be done as per RBI's guidelines. Okay. Then there is a bill discounting model. Okay, what is a bill discounting model or a receivable discounting model? You can call it. So imagine that I'm a real estate company. Okay, and I have 10 properties on rent, and I have 10 properties on rent. I'm getting X amount per month for each property as rent. Now, how much? So I'm getting monthly rentals, but I will get an X amount in 1 year. What if I want all that money right now? Okay, I could get that money right now, but all this money coming up in a year, if I want it right now, that means there has to be a discount factor attached. Why discount factor? Because money now is worth more than money later. So 10 rupees now will become, let's say at 10% per annum, become 11 rupees later. Right? So if I'm supposed to get 11 rupees after a year, I should be getting 10 or 9.9 rupees right now. Okay. So based on this, on my receivables, I will get money right away. So there are NBFCs which are doing this. So, and there are tech platforms which facilitate this work. So what can an NBFC do? An NBFC can say, okay, show me your lease rental agreements. These look reliable. In 1 year, you're going to get this much money. Let me pay you this right now. How does it help me? If I need to incur capital expenditure as a business, like I want to buy some assets for my business, I can do that because I will get the aggregate value of all my rentals right away. Another way to do it is a lot of businesses need working capital. So I may fall short of, let's say, 3 lakh rupees, which I need this month. Now, how does this, in businesses, you will see that there is a credit cycle. So I will give goods, products to my customers on credit, and I will purchase also on credit, but there can be a gap. So from time to time, I may run short of enough money to pay my immediate needs. However, I will have enough invoices which are pending. I would have raised bills. So my receivables, basically pending bills which need to be paid, will far exceed my liabilities. So as a business, I am safe. But if I look at the cash that I have in hand, it's not enough. So what happens in these situations is that you can again use these invoices and give them to an NBFC, and the NBFC can discount. Discount meaning you'll get this money after 3 months or 4 months. So they will deduct the interest rate amount and give you a slightly lesser amount right now so that you can meet your everyday needs. Okay. This has specific legal issues that people look at this model. Like they may do an assignment of an actionable claim under Transfer of Property Act, or they may do it through a bill of exchange. There are different ways in which this is done, but this is a popular model. Now, if you look at so there are companies which do this. You can look at Bajaj Finance or Mass Finance, MAS Finance. Okay, so these are the companies which are doing this model. An example of a platform for this model is something like what CredX does. So I'm writing the names of the companies here. Bajaj Finance, Mass Finance, you can see. And CredX is basically a platform that enables you to list your receivables online. Okay. And the platform is such that it will enable you to find a buyer, which is another NBFC who is willing to basically perform this discounting work. So there are two angles to it. You could have a company which is, you could be working for an NBFC which performs this work, and that NBFC may or may not have a tech platform. The other is you may work for a tech platform which onboards NBFCs and which onboards customers to upload their invoices. Okay, these customers are usually businesses, right? Because businesses have receivables. Individuals don't have. They just get their salary or they get their fees. Usually it's going to be businesses. So if you're working for such a tech platform, while your core work is around tech, you will still look at a lot of banking laws. Okay, so two kinds of players are there here. One is the financiers, and they may or may not have a tech platform. And second is pure tech platforms. When you have a pure tech platform, you have to look at a lot of times whether it can completely skirt around the RBI system, or whether they will be partly regulated to subject to that. Okay, what kinds of disclaimers do they need to issue to customers? What kind of disclaimers do they issue to the lenders so that they are not involved in the whole process? Those become important questions, and you can only answer that question if you know the banking law extremely well, right? The other part, if you're working for these companies, is to identify what happens if there's a default. How does the business deal with it? Because once your receivables, like I have, let's say, assigned receivables for rent for 10 properties, okay, but there is a termination of one of the rent agreements for convenience, or I don't receive rent for some reason, then what happens to that transaction? So those scenarios have to be mapped out. So what do you need to know for this? You will need to know some parts of, you will need to know RBI regulations. You will need to know contract drafting. You will need to know data related aspects. Okay, you will need to know recovery related provisions under different laws, and recovery related provisions become really important here because sometimes, like those of you who are working in banks are very used to using 3 laws a lot. If you have a secured loan, you will use SARFAESI to take possession of the property. If you have an unsecured loan, you will go to the DRT under the RDBA Act, and in some cases you will invoke the IBC. You will have strategic considerations and identify when IBC has to be invoked, when IBC doesn't have to be invoked. Basically, when the value of your security is, if it's a secured loan and the value of your security is too low, then you won't want to enforce security but go under IBC, right? But the thing here is that in case of these unique models which I'm talking about, loan amounts may be lower than what enables you to go to DRT. It will be lower than what allows you to go to a SARFAESI. Okay, SARFAESI may not be applicable because you don't have immovable property as security there. So what happens then? The enforcement process changes. You may have scenarios where you have to undertake ordinary civil litigation, or you may have scenarios where arbitration is invoked. Okay, and if you invoke arbitration, then you will want to optimize the process, because arbitration can be long in India. It can be difficult, expensive. Okay, it could be time taking because processes for appointment of arbitrator are not mapped out. Okay, there are many reasons why arbitration can fail. So you want to optimize that clause also. So your work goes from the stage of planning the business entity to the business entity's product, the contracts with different parties, okay, and the disputes part also. How will we enforce if something goes wrong? And this is just the banking and finance part. If this company or this venture decides to scale, then they are going to take investment. They can have other investment lawyers on board, or they could consult a law firm, but they could also consult you. Okay. And if you as an independent practitioner or small law firm owner are willing to provide these services, they will first come to you because you help them with a very complex requirement on their products. They'll be like, can you do investment work for us as well? And usually if you see, if the platform scaling up and if it's a big investment, the investor will get a law firm to give them a shareholders agreement. Okay. But as the company's counsel or the person who has the retainer, you will be involved in reviewing and marking up the document. Okay, so you'll be doing a lot of high value work. You're not doing the first draft. You will be involved from time to time in the DD process. You may need to explain to the investor's lawyer what are the important compliance requirements, and you will have to ensure that in your company with the founders, you have given them the right set of compliance, the right set of documentation, so that they are DD ready, they are investable. So they have to be due diligence ready, they have to be investable. That's going to be your job, that all documentation is in place. Also your job is going to be that the investment agreement can be well negotiated. So you will mark it up, you will suggest changes to it. Okay. Now, another business model apart from the discounting model is, one second. Yeah. So I'm going to explain what are the structures that can be used by businesses. This was the NBFC model. Now, if you look at the major private equity players in the country who are operating, right? Like, let's say KKR or an L&T Infra. L&T Infra is an infrastructure finance fund, right? But just look at L&T Infra, Avendus, or KKR, Kohlberg Kravis Roberts. These are, so they are private equity players which have two kinds of entities, and that is a structuring related issue that they face initially. So one entity is usually an NBFC, okay, a non-banking finance company. The other entity is an alternative investment fund under the SEBI regulations. So as an NBFC or as a private equity player becomes big in this space, they would need to have this kind of setup. What is the difference? Why would somebody be an NBFC? Why would somebody be an AIF? That happens because if you are an alternative investment fund, there is something called, you are regulated by SEBI, not by RBI. So the difference is that you do not have something called capital adequacy or provisioning requirements of RBI applicable to you. Okay, but there are, and you can invest through debenture. So you can get exposure to debt, but through a debenture. Okay. Now, the disadvantages of having an AIF are, the advantage was that you don't have RBI's capital adequacy and provisioning requirements applicable. What do these say? These basically state that if I'm lending, if I have X amount of money of depositors, then how much do I need to provision for? So that if there's a demand, for their money back. I should not go bankrupt. Okay. So how much capital do I have as against the debts? That's the provisioning requirement. So RBI's provisioning requirements are not applicable. How, however, if I have an NBFC, okay, one more disadvantage is there if I have an alternative investment fund, which I'll explain to you with the NBFC structure. If I'm an NBFC, what happens is that I can take advantage of SARFAESI and DRT. This is not applicable if I have an alternative investment fund. So the benefit is that I skirt around RBI's requirements for capital adequacy and provisioning, but the disadvantage is that I cannot use the DRT and SARFAESI framework. Okay. But I can take exposure to debt through debentures. If I have an NBFC model, which banks and housing finance companies use very frequently, okay, how do banks use it? There is a holding company which has separate subsidiaries to do this. One of those is an NBFC. So the NBFC model allows me to basically use the DRT SARFAESI framework. There is another advantage. If I do not receive interest on a loan on a timely basis, I don't have to pay tax on it. Okay, so usually what happens is that in under tax laws, all mature companies are paying income tax on an accrual basis. So when my income has been earned, basically on the due date, I will pay tax based on that. Okay, the exception which is applicable only to NBFCs here in this context and not to AIFs is that if you were to receive interest and you didn't receive it, you don't have to recognize it as income. Only when you actually receive it, you will recognize it as income. Okay, so if I have a default, then I have an advantage that I don't have to pay the tax. I can also use the DRT or the SARFAESI route if I am an NBFC. I can't use that route in AIF. If there's a default also in an AIF, I will have to still pay tax because I have to recognize that income. Okay, so this is a difference which we have to accommodate, and that is why when the business is structured by the promoter group itself, they decide that how do we structure this, which part of business activity, which products do we take through the AIF route, which products and services or which lending do we take through the NBFC route. Okay, now I can show you some examples and screenshots of sites that you can see to understand how this happens, and then we will go on to the skills. Amit, I do not know a matrimonial lawyer here or at the moment. So you look at this, okay, Credex. Now this company is basically a platform business. Here it says sell the invoices. So it clearly says what to do. So you basically upload invoices on the platform. You find a buyer for these. Who's a buyer? An NBFC. An NBFC will buy these invoices at a discount. You will get the cash. The receivable moves from your balance sheet because you will consider it as paid out to you right now. Okay, and it moves onto the books of the financing company. So Credex is basically a platform. Okay, it will tell you. So now what's the difference between a platform and a service provider? If Credex itself provides you the service where it is paying you the money, okay, then it becomes the NBFC directly. If it's just connecting you with other NBFCs, then it doesn't itself become an NBFC. Okay, therefore now look at this, the charges that it levies. If you are paying, if it charges you for connecting, then it's a fee. Why? Because it's a skill-based business. It's a service. If it's charging you for providing the finance, then it's a fund-based business, right? RBI regulations require NBFCs to have more than 50% income from a fund-based business. And this is their CapEx discounting product. So you can see it here, invoice discounting, CapEx discounting platform, and there's another something called early payment technology. Now, what the scene is that I have explained to you 2 or 3 models. Okay, businessmen can come up with infinite models over time. Now, a lawyer has to be capable of understanding these models commercially and then mapping them to the legal and regulatory part. And a lawyer who doesn't have that sense will not be able to do it. Like, imagine you're somebody who says that if a client requests me for an employment agreement, I can do it. I'm a contract guy. I can do lease agreements, employment agreements, collaboration agreements. And you get a fintech entrepreneur asking you for this. You will fail without having specialized access and knowledge of this area. However, if you have this, then what's the difference? The difference is that you can do more high margin work, you can do more complex work, you can charge higher because your skill is rarer, the work is more complex. This entity which has come to you for such work is likely to be funded or at least will grow fast if it is successful. Okay. Tuhin, did you get it about AIF and NBFC rules? Ishrat, you asked me a question on job opportunities in AML and KYC sector. So AML and KYC is not a separate sector, okay? Every banking and finance or NBFC will have to comply as per RBI's guidelines with AML and provisions. And if you are opening an account or if money is being lent to you, then there will be some KYC requirements that have to be met. You cannot exclusively be doing only this. If you're litigating in court and defending clients against money laundering charges, that's a different thing. Then you can exclusively work on money laundering, anti-money laundering laws. Okay. But in other situations, you have to combine your knowledge of other laws with anti-money laundering. Okay. And also remember that when it comes to the banking sector, RBI will prescribe specific KYC and AML provisions to be complied with. So those are in the nature of a compliance. You may not be looking at a lot of PMLA, that's the Prevention of Money Laundering Act, for regular day-to-day work unless there is a prosecution under the act. Okay, Sushil is asking whether the NBFCs will take the usual safe route and engage a law firm rather than try a solo lawyer. This is a very good question. So I'll tell you what happens here. These are new companies growing very fast. Okay, there aren't enough lawyers who understand this kind of work fast enough. They cannot respond on with respect to the complexity with the agility that a solo practitioner who knows this can provide. These firms focus on building in-house teams over a period of time. Okay, so they may not go to a regular law firm for all of this unless they attain a certain scale. By the time they attain that scale, you might be one of the people they come to first and then they go to a law firm. Okay, are you getting the point, Sushil? The usual safe route of going to a banking and finance lawyer is not actually that easily available, because there are a lot more fintech firms. They may not always be able to afford the price that a law firm charges. They may not find the value that they need. And a lawyer's work here, as I explained to you, involves review of the product, the site, what is happening. And if you speak to fintech lawyers, you will find out that there is a shift that corporate lawyers working in law firms are feeling, where there's a bigger requirement to understand the business side of things, how the website functions, how the credit appraisal mechanism works, how the onboarding process works. So a lot of how the API integration process works, like Credex is a platform. How does its API integrate and match you with the seller, with the buyer of the discount or of the bills? So if you have 10 invoices amounting to 10 lakhs and an NBFC wants to buy it, how does Credex integrate with that NBFC? Now, those things corporate law firm will charge you heavily for the time spent in reviewing all of that. And so there are very good reasons why you as an independent lawyer will be able to take that up. Okay. Yeah, Dhwani, that's a good input you've given, Ishrat, because SignZ has specifically products meant for digital signing and authentication and KYC. So that can be, but that's an in-house opportunity once again. right? So fintech sector is having this scenario where you can advise on the side as a independent practitioner, and you can move in-house if you want, or you can just start a fintech focused law practice. The earlier you get into it, the better, because it's already complex right now, as you saw when I was explaining to you. Over time, it will get more complex because there are more and more financial services that can be provided, right? So let me see if I can pull out the article for you on the important fintech firms in India. But the articles also are old, and we have many more fintech firms coming up in the recent times. Okay, so what you have to be good with is the ability to understand the model, how finance works, how technology works. Lawyers have a very big uh, fear about looking at numbers, so you have to be mindful about that. Like, see this. Okay, so I'm going to point to some of the fintech firms. Paytm Money, you all know about. MobiKwik, you all may be knowing about. Check about this. Lending Cart, Easy Tap, Loan Tap, BillDesk, a lot of you may know about. Capital Float, Pine Labs. Okay, so how do you actually start to understand this model? Okay, uh, you can start to understand this model by choosing a few companies and targeting that how they operate, which will give you a good sense of things. But to do that, you need a basic set of skills, right? Like, you can't directly, swim in the Olympics when you start to learn, let's say, swimming. You need to start learning the basics, swim in a regular pool, then go to an Olympic sized pool, get professional training. Okay. So how this happens, it will happen in phases. Now, how do you go about learning this as a lawyer? And Bharat, I will also answer your question that how are we uh, helping you work on the fintech sector through LawSikho's banking and finance course. So what is the work that a lawyer has, as I just explained earlier? First is the structuring work. Okay, what is the structuring work? Do I need to have an NBFC? Do I need to have an AIF? How to go about incorporating it? So now understand this, that when you're incorporating a new entity, apart from the Companies Act part, drafting an Articles of Association part, you will need to have a registration or a license from SEBI or RBI. You will need to comply with specific provisions of those regulations. You will need to have the contribution structured like that. The capital has to flow in like that. Okay, so there is an additional layer of complexity involved. That is the structuring of the business entity. Then there is the structuring of the product and the business model, that how is it going to generate the money. Okay, what is the product is going to offer, who are the parties who are going to be there, what is the economic flow of money. Okay, then you'll see that these products, are they permitted under RBI regulations or under SEBI regulations? What are the contracts I need to have? So it moves into the contracts, so that my relationship with each of the parties involved is clear. Then there may be some outsourcing that is happening for the NBFC itself, and you will have to look at two things. Then you will have to make internal policies, and you will look at RBI's regulations for outsourcing. So there's a lot of RBI regulation here, and it's not just sufficient to go through RBI's regulations on the net in the PDF, because that will not enable you to perform the actual work. It will give you some learning, but the work won't happen. Okay, so there's contract drafting, policy drafting, business structuring, business model related advisory work. On a regular basis, there will be compliance work. RBI has specific compliance and reporting requirements that you need to do. If you're a CA or a CS and with a law degree, and you have your independent clients, this is something that you may add on. Okay, not every CA or CS does this ordinarily. So this is something you can add on to your work. Then if the fintech startup is, or if the fintech company or NBFC is consumer facing, they may have a play on data over there. Data, what does the play on data mean? Because if you are looking at businesses, it's one thing. Okay, if you're looking at consumers, you will get a lot more data about who needs loans for what is their income, all of that. So they may want to monetize or share data with other entities to market other offers. So you will have to ensure that the policies are structured in the right way under the current IT Act, and you are prepared for the Personal Data Protection Bill also, to take consent in the right way. Okay, what are the points that you obtain data from? If you're a consumer facing startup, if you have a consumer facing model, then obviously customers. Then there are information utilities under IBC which get data on defaults from banks. Currently, the data is not being very regularly shared by banks, but once that happens, then you will get information about defaults from information about defaults through the information utility network. Then under SARFAESI Act, where the secured loans have been taken, there was a registry created called CERSAI, CERSAI. So that registry has information about SARFAESI invocation, basically when there's a default and the provisions of the act are invoked. So that is another category. So you have these 3 points where data is available from. Currently, the highest focus is on the customer facing data. That's where even the biggest category of protection will be needed in the coming times. So this is another skill that will be important for you. The other category of work is restructuring work. So IBC, there was an ordinance where the 1 lakh limit was increased to 1 crore. And there are talks of IBC being suspended, Section 7, Section 8, Section 10 proceedings, fresh proceedings may be suspended for a period of a year or so. That notification is not yet out. So what does that mean? If that happens, then what are buyers and what are lenders and what are borrowers going to do? They are going to use the regular DRT SARFAESI mechanism. They may use negotiation, they may use restructuring, contract-based restructuring. Okay, and RBI has a stressed assets regulatory framework issued in June 2019, which says how for project loans it is there, which explains how restructuring can be undertaken for specific kinds of project loans. So what does restructuring mean? Restructuring basically means that if I am not going to be getting my loan, how do I get the maximum possible in the case of default? So you will understand that most banks do not immediately want to sell the assets of the borrower because the borrower has more promise in the business versus the existing assets, because the existing assets may have lost value. Okay, so that is why restructuring is most often resorted to, because if the business of the borrower grows, then there may be more value in that. So in those scenarios, the lender doesn't enforce the loan, doesn't enforce security, or doesn't take action when there's an unsecured loan, but wants to restructure the loan. Maybe it may give a interest moratorium. Okay, so there are RBI's provisions that get triggered when you do that. You may have to provision additionally. You may have to meet additional provisioning requirements. Why? Because if your interest was due and you have decided not to take it, then it becomes debt for you. So you have to have adequate amount of capital for all the debts that you have led. Okay, so this is restructuring work will definitely be there. There'll be a lot of negotiation, which lawyers can help. Whom can lawyers help with this negotiation? They can help lenders, especially the NBFCs. They can help borrowers also. Okay. Litigation work, obviously lender side work is there, borrower side work is there. Some of you have heard about getting onto the panels of banks and NBFCs. And how that happens is, so banks and NBFCs have their own in-house teams with processes mapped out. NBFCs don't have so much, that totally depends, but a bank definitely has. So its in-house team will have regular, like they will appoint lawyers on a retainer basis across different territorial jurisdictions where they need to enforce. So you could be on a panel, or you could have a retainer for a specific court or a forum. Okay, that is the part you know about. And I am talking about going up the value chain and doing other kinds of work. So you could continue to stay on the panels of the banks that you are on or that you aspire to be, but in addition, take up the other kinds of structuring work so that you move from a more assembly line process to a rarer, harder part of the work. Okay, and in that scenario, your existing credentials of being on the panel of a particular bank or NBFC will definitely be useful for you. So now I was explaining, in litigation, there will be a lot of non-RDBA and non-SARFAESI work because of these innovative NBFC models. Okay, in RDBA, the minimum limit is 20 lakhs. which financial institutions use to enforce unsecured loans. The loans that we are talking about in this space, a lot of these are of a lesser amount than 20 lakhs. Okay. In this scenario, you will not use RDBA. Okay. So you will have to use arbitration or a regular civil court, or you may just use negotiation as a technique and settle out of court. Then similarly, SARFAESI will not always be applicable because a lot of these debts are unsecured. Sometimes these are on movables, and SARFAESI is most often used for like an immovable property, enforcement of immovable property mortgage. Where I already have possession of a pledged article, I will not need to use SARFAESI. In case of a gold loan, for example, I will not use SARFAESI. Okay, so these are the kinds of work that lawyers need to be prepared for. Now, how can you learn this work? How does LawSikho's banking and finance course help you in this regard? So we start with the classical work, and we move on to the new segments. Okay, what is the classical work? Classical work is the lending and security packages. So this work, now, if you see after the whole lockdown gradually starts to phase out, we are going to have manufacturing kick in again, right? So China's reputation globally has taken a hit. People are looking for alternate manufacturing destinations. Manufacturing is money heavy. Money heavy means that as companies begin to identify India and set up alternative operations in India for their global manufacturing, they're going to need a lot of loans. Okay, so regular banking finance work is going to shoot up. Okay, banking finance work means banking finance loan agreements. Security documents means like mortgage deed. There are different kinds of mortgages, but that's not limited to your Transfer of Property Act only. You cannot learn how to draft a mortgage deed by looking at your Transfer of Property Act. There's way more that you need to keep in mind when you do that. Mortgage deeds for security, basically. Pledge agreements for pledge of shares. There could be listed or unlisted shares which you will be pledging. So there's contract drafting part, there's a statutory part, and the enforcement part. All three have to be kept in mind. There are corporate guarantees from the parent company. There could be personal guarantees from the promoters. This structure is slightly different for a regular business finance, like a corporate finance transaction, and it's different for a project finance transaction. So we will explain to you the difference in the course and share the documents of how project finance documentation is different. Okay, because in a project finance, what happens is the security for the project is the receivables from the project itself. Okay, so if you basically want to raise 100 crore loan for developing a 5 kilometers of road, you will put up a toll to charge receipts to charge users for using it, and that will be a part of the security. Okay, and the parent company will give certain kind of comfort. It may not be a full-blown guarantee. It could be a letter of comfort or a sponsor support undertaking. So the slight difference that's there, if the parent company is supporting the SPV. SPV is the borrower in a project. The borrower is not the full business, but a part of the full business spun off into a subsidiary which is going to take the project. Okay, so this is going to take care of your needs for regular corporate finance and the project finance, which is going to kick in when for the development of the country's infrastructure and for the manufacturing sector. These two scenarios. Okay, there is focus on the drafting of the contracts. How do you go about drafting these different contracts? So apart from the statutory part, the drafting parts have been focused on. Negotiation, certain techniques are explained. Okay, then lending related aspects. What are the different types of loans? I explained to you what I said. I mentioned a loan agreement, but loan agreements are of various types. Okay, there is something like a revolving facility, there's an overdraft, there's a short-term working capital, there's a term loan, there's a syndicated loan. So how do these work? And RBI has also put in regulations for these. So how do the agreements tie up with the regulations that RBI has passed? If you take foreign loans, okay, these are called external commercial borrowings. These are available at a much cheaper rate than domestic loans. So who is eligible for these loans? On what terms? How do you go about taking the loan? How do you draft the document? What are the regular advisory and compliance aspects of these? Then the security documentation aspect, how that works, which I just spoke about. Then Again, the contractual terms on repayment, event of default, consequences of event of default, these are very specific to loan agreements. These are different from a regular contract. The statutory aspects of RBI, prudential norms, its notifications for willful defaulters, stressed assets, payment and settlement systems. So this is where the technology part starts getting in. Okay, KYC and AML. Okay, then FEMA related aspects, they get into the banking sector. So you are being explained about that. How does FDI help? If any of your NBFCs are scaling up through foreign investment, then FDI is important. There are overseas direct investment related aspects, guarantees. Okay, so there can be scenarios where an Indian company is guaranteeing a loan taken by its offshore subsidiary. Okay, or a foreign company guarantees a loan taken by an Indian subsidiary. So for that, this segment is very relevant. Okay, so this is the big ticket projects. There is the aspect on recovery litigation. So SARFAESI litigation, how does it work? RDPA, DRT enforcement, IBC. Okay, so after 6 months, you may have this again being invoked. Past proceedings are still continuing. Okay, recovery litigation under Payment and Settlement Systems Act. So when there's an ECS default, there are a lot of electronic payments that we have all automated, right? Now, when there's a default on that, on an NEFT or an ECS, then how does it happen? So that's like NI Act, but under a different act. Okay. Consumer litigation under banks. So when you learn consumer litigation against banks, so if you learn all of this, you can use it in the NBFC scenario also. Then we have a specific segment on recovery litigation, regular civil suits. Okay. So when an NBFC wants to enforce a retail loan and mortgage suits. So this is important because there are specific scenarios where you can't use RDBA or SARFAESI, as I explained. Okay, other enforcement mechanisms are explained. Interim finance under IBC. Use of option to convert loan into equity. You would have seen this in many loan documents. How does it work? Okay, debt restructuring, oppression and mismanagement proceedings by lenders. Then specialized loans like microfinance loans. So you have microfinance NBFCs also. So loans against jewelry, like a gold loan. How do these work? Okay, and in addition, we have some notes on the AIF NBFC space. We will add in the chapters on how an NBFC is to be structured, how an AIF is to be structured, and the fintech side of it. Okay, so the aspects on P2P lending, payments, banks, regulations, all these are included in this. So these courses rapidly keep on upgrading because of the innovation takes place in the market. Okay, now I'm going to take some time, maybe 2-3 minutes. So what can you actually be eligible for if you learn these things? If you learn these things, you can actually take up jobs offered by, you can either take up jobs or retainers from fintech companies, NBFCs, banks. If you're an independent practitioner, you can do litigation work for banks. Like banks have lawyers on panels in DRT, SARFAESI in different states. So you can take that up. Okay. You can do advisory and contract work for NBFCs. So there's a bank as a client. You can be a local counsel for a bank. Understood? Banks don't go to a law firm for a regular enforcement scenario. They will have their in-house team coordinating directly with the local counsel. Okay. So you can be that local counsel, and on the side, you can also start advising the NBFCs on their products, compliance, all of that, because you've learned new skills. Okay. So you can take up independent retainers, and as you get more business insights, take up more clients and specialize and have a NBFC fintech focused practice. Okay. Yamini, you've asked me, okay, Prachi's asked me, how do we get into banks as a lawyer just after graduating? How do you get into them? So some banks are directly hiring in-house counsels. Some banks release public notifications. And if you want to apply for a private sector bank, what's important is you demonstrate these skills. So every week, what you will be learning with us is as you draft, let's say, a DRT petition or you draft a SARFAESI notice, you will be building an active social media profile where you're posting about your learnings for a prospective client or a recruiter. Okay, and you will practice also writing articles on these areas. So you will be tracking banks which are actually hiring. You'll be tracking NBFCs which are hiring. NBFCs are hiring in-house counsel, so you track both. Okay, and NBFC space is where there is more expansion at the moment. So Prachi, you would want to look at that as a fresher. And what happens here for these young startups is that they will issue a common hiring notice for people with fresher to 3 years of experience. And if you're really good, it doesn't matter if you're a fresher, you can be hired and rapidly get the value of what a 2 years qualified experienced graduate gets. Okay, that happens in these organizations because they are smaller, growing very fast. As you start working with them, you get a lot of organizational insights which are very important for you. Okay, they can also start with engaging you as a trainee. The most important thing is they should not have to train you from scratch when you start with them. If you demonstrate that with your prior work experience, that's going to make you eligible for hiring. And it's fine if you don't get a job right now, but if you start getting work from them for the next 3 months or 4 months as a trainee, without even the money for it, you know that when things improve, you're the first one they're going to hire. Okay, why do you need 5 years minimum experience, Mahavir? Not at all. You don't need 5 years minimum experience. FinTech space in India is not that old. Okay, if you go 5 years back, you probably had a few prepaid payment instruments and Airtel Payments Bank and Paytm Payments Bank. Like Paytm was there, Airtel Payments Bank also I think came a little bit afterwards. So you can't have 5 years experience in the space, which is why having 5 years minimum experience as a lawyer makes no sense, because what will you do if you don't have relevant sectoral experience anyway? Okay, so it's not important at all. Now the question to think about is it worthwhile to do this now? Okay, now understand this, that this is a very complex area. There's a lot of innovation happening. This is the best time to get in touch with all these companies one after another, map the fintech space in India, understand what they do, and be up to speed. Okay, what that enables you to do is you have a huge advantage over others who want to make a career in this space, because you're learning full time. On the side, you're also talking to all these companies and identifying where the opportunities lie, researching on the business model. So this is like your live internship. Nobody is calling it an internship, but this is actually the real market research you need to do. Because when you go up for an interview, imagine, okay, that you go up for an interview at Navi Technologies and you say, I have studied 5 fintech players, okay, and these are the things that they do. This is how their business model works. This is where law is involved. Okay. Now, now they may not have invested in any of these companies, but you know the legal stuff. Okay. And if they need a lawyer, would they not hire you? That's what people want from lawyers. Today, you have lawyers saying that give me the work, I'll do it. I will work hard. I'm a fresher. Give me an opportunity. I do DRT litigation work. I have not done this work, so I can't do it, or it'll take me 6 months to understand. Okay, so people are like, I don't have that much time to bet on you, yeah. But if you go with such kind of research or ready, prepared, then they know, okay, that you've done research on 5 companies, you know how the law works, how to structure their business, you know all of these things, how to do their product structuring. Then they will say, okay, here's a different model. Can you help us with this? If you do this, then we'll hire you. End of story. So I was looking at Navi Technologies LinkedIn page for hiring, but they weren't hiring a lawyer at the moment. But I'm just saying that when they are hiring, and they will hire, like a lot of these fintech companies or funds which are investing in these companies will be hiring. Okay, so the other possible client or a recruiter is a fund specifically focused on fintech ventures. They may also be looking out for you. Okay. So, and now you understand this, that these are scalable models, fast growing, rapidly funded. In-house counsels here or lawyers getting retainers here are going to make good money. At least 50,000 a month is very easy to get. And why am I saying that? Because the business is scaling up, there's money involved, there's clear value. The reason that lawyers get lower income in certain areas or by working as a junior is because there are no specific skills, outcomes, or return on investment that they can promise to a senior. Here it's very clear. The company knows for what they need an in-house counsel. If the in-house counsel does his job, they can quantify it, and they don't have to like blink an eyelid for paying like a 50,000 retainer or a 50,000 retainer or a monthly salary. Okay, Motorola one, we'll get on to the equity and VC arena in a separate way, in a separate webinar. Okay, so I'm going to invite you all, I've completed the session. I'm going to invite you all to share your inputs with us on what do you think about it. And in case you want to, on your feedback on this session, have you identified some new areas to work on? And in case you want to know more about the banking and finance course by LawSikho, it starts on 15th, 15th May. You can reach out to me by WhatsApping me on my number 9717301797, and we can have a detailed conversation on what opportunities you can use further and how we can help you through the course. Okay, you can reach out to me on this number, and my email ID is abhyuday@ipleaders.in. Okay, 15th. So I have made myself specifically available for requests for this because this is a very technical space. So I will be happy to get on a conversation with you this week. My suggestion is reach out as early as you can so that we can plan out the schedule. It will take you some time to plan out when to start and all of that. 15th May is the deadline. Don't wait for the last day. Start planning early, thinking of it. So have a conversation earlier before the last day. Okay, cheers everybody, and all our master access and library students will be getting access to the course, just letting you all know. Okay, cheers and see you. Bye. Let me know your feedback on the chat for 30 seconds. Thank you everybody. Cheers and see you. Bye. Keep participating in the webinars. We'll do one on PE and VC space as well.